Let's now focus on the power and industrial space. Nikhil Nigania, who's the Director Senior Analyst at Bernstein, joins us now with his call on the sector. Nikhil, hi, good morning. Thanks for joining in. Overall, I just wanted your thoughts on the power sector first up, and also what are your expectations from Q4 results? What are you expecting, say, from a company like L&T?
Sure, thank you. See, in terms of our broader view in the power sector, we continue to be positive. We are not worried about short-term volatility. If you look at the cycle, it started off a long time, and we think it's a multi-year cycle, multi-year capex cycle that we are seeing in the power sector because they are fundamental drivers. Primarily, the power demand-supply situation continues to be tight in India, especially for the evening hours or the non-solar hours, as they are called. And we don't see it changing for the next 3 to 4 years. So it will be a favorable demand-supply situation and tons of capex which the sector needs. So we continue to be positive in terms of stocks. We like NTPC Power Grid, the power PSU names continue to be our top picks. And to your second question with regard to L&T results today, while on the stock we are positive from the medium to long term, on the earnings side, we do see some downside risk on the guidance, both on margins and on order inflow growth for FY25, given Saudi is cutting its capex, Saudi Aramco, even NEOM project. And even in India, it's election year, so 3 months order inflow could be modest. So while we are positive long to medium term, the results, we do see some downside disappointment.
All right. Hi, Nikhil. Good morning, and good to hear your thoughts on L&T as well as the power sector. In the near term, I wanted to ask you, we have these RBI guidelines that came out with regard to provisioning. Do you see any kind of derailment on the capex plans because of these RBI guidelines, or do you think things are still steady and there won't be any kind of impact on the capex plans that they've already laid out?
Sure. So if you look at the RBI guidelines, the draft guidelines which have come out, the implications, it's a proactive move by RBI. They have done it earlier in real estate, in consumer financing, and now in project financing also, when the times are good, they seem to be taking a proactive step to make the lenders have more skin in the game as they lend to these projects and be a bit more cautious and do more checks as they look to lend to these projects, even on the power side per se. Now, coming to the impact on the capex front, if we translate these norms into likely hike in interest rates, as per our estimate, let's say a renewable project was getting funds at 9% interest rate. As a consequence of this, they'll probably get a 9.3% interest rate in our maths. So a 30 basis point rise in interest rate possible for the borrowers should not change the capex cycle in our view. It's a very fundamental, sustainable capex story we see in India, both on infra and power. So we don't see a 30 basis point really swing the capex story for India. Plus, the other impact of this is, see these renewable companies, for example, look to borrow in dollar bonds versus rupee loans. The spread between borrowing in dollar versus rupee is almost 150 basis points right now. A rupee is much cheaper than borrowing in dollars. Hence, a 30 basis points there also does not change the maths towards dollar from rupee loans. So yes, so we continue to see the positivity on the capex cycle continue despite these norms.
Got that, Nikhil. Hi, good morning. Now, talk to us about so that L&T call. Is there for a stock price as well? Is there sort of meaningful downside, or you think it'll remain well supported? You said that Saudi risk and the NEOM project, etc. So just put some numbers to it.
See, in terms of so the two key things to look out for in the guidance for next year, one is margin, and second is order inflow growth. So FY24, for which the final Q4 results will come today, they are likely to exceed 20% order inflow growth for FY24. But FY25 on the back of that could possibly see even a flat to slight dip in order inflows for L&T, given the large base they are coming on. And second, in terms of margins as well, it's a possibility that this year they'll end up 8.25 to 8.5% core EPC margin, and the next year could only be slightly up, not the 9.5% or 10%, which some are factoring in the street. So in terms of stock reaction, if you look at last few results, on slight downward guidance on the orders or margins, stocks have been, L&T has been volatile. We saw correction as much as 10% a couple of times on earnings guidance disappointing versus street estimates. But as I said, that doesn't change our structural view on the stock on the positive side.
Okay. Just one more question, Nikhil. You did mention, I think you like Power Grid, etc. Out of the coverage universe, right, beyond the 1 year kind of view, if you wanted to take a sort of longish bet, right, Because there is a mix of thermal and there is companies investing for the future on the renewable side as well. So taking a comprehensive kind of a view, if you had to pick, say, one or two names, which are best placed where you tend to make the most absolute returns, what would those names be in your coverage universe, Nikhil?
Sure. So valuations across the power universe is not cheap. So one has to be selective. The stocks have run up quite a bit in a year. But the two names which I mentioned earlier continue to be the same, which is NTPC and Power Grid. So NTPC, for example, if you look at from a thermal requirement for evening time or for renewable as well, they can borrow much cheaper than peers. And with this RBI guidelines coming in, possibly even further cheaper than peers. So which plays to their advantage. And second, on Power Grid as well, transmission globally is one of the biggest themes playing out. Everywhere the grid is becoming a massive constraint. In India, we have an excellent grid, but gradually as we ramp up on renewables and new use cases of power come in through EVs, data centers, hydrogen, the need for expanding or investing in the grid will only go up. So both these names are, we think, are structural investments. They trade at about 15 times, 16 times earning, which is in line with global peers. It's not really very expensive. So those are the two names I would choose.
Don't you think, do you have coverage on transmission sort of companies, that side, ancillaries, etc.? Or no, not yet?
Not on equipment side. No, we don't have coverage.
Not on the equipment side. But that also perhaps is a, I mean, if you think that is going to be a space which perhaps there's going to be a big shortage and demand, that's also well placed, right? Companies, although you don't have coverage.
Without a doubt, exactly. So the transformer companies globally, if you see, not just in India, I mean, there are companies in Taiwan like Fortune Electric, which have done really well on the back of a transformer shortage globally. So if I had to talk about investor feedback, they tend to prefer the equipment suppliers more than utility companies. That's the go-to area for investors. But the stocks also trade at rich valuations. So yeah, that needs to be factored in.
Thank you for joining us and giving us your thoughts. That's Bernstein on the power sector.